All right, Max, we're live. Let's do this. Another weekly market ideas with Max Berchtold and Computer Brain. Let's get
There you
into
go.
it. Max, you want to take us away?
So as we just discussed, I would start with the higher time frame outlooks as we closed the stream the last time on my side with the higher time frames. And we spoke about a lot of stuff. For example, also these weekly CME gaps that we got closed. And then we had that big Trump pump out of there back into the range resistance, just marking another lower high on the weekly market structure. And now the next weekly open here looks actually terrible as we are back into the old CME gap. And yeah, the higher time frame trend now is down. The market structure is broken. We are clearly not in the top range. We completely broken down. We had a bearish retest on the higher time frames. And I will now mark some key inflection points or levels on the higher time frame on the weekly for what I'm looking at, where I'm looking at the price should find support or are the next key levels that I see. Clearly, we see also on the CME chart here, the weekly breadth is turned bearish fully and the cycle is very down. So this is in general an indication that we are definitely having some bearish um, underlying strength or better said, weakness. And this can turn very much more bad than we actually are at the moment, as we had now in this bull market so far clear three drives up here, with that marking the third one, and this could potentially be the end. I will not call this the end, as I will show on the daily chart what I'm looking at for a possibility to come out of this again. But yeah, on the weekly time frame, this looks really toppy. Um, so yeah, we last time discussed the double top. I think this is clear. And level wise, so I'm
One thing,
switching
Max,
the
just a question I
yeah.
have personally. So your indicators down below, you have your custom stochastics
Mhm.
that are the green and the gray that have the sell and the buy signals, and then you have the double smoothed. I think it's Bressert stochastics that Bob Lucas uses as the
Yeah,
lines that are green and red. So obviously, right now there's a little bit of a conflicting signal there on a very high time frame because we're looking at weekly.
yeah,
So it says it's very much top of range sell on your custom green and gray stochastic, but on Bob Lucas's like the double smooth stochastic, it's very much a buy. So
yeah.
how do you navigate just such a conflicting signal?
Yeah, well, the thing is with these stochastics, they are very aggressive in turning. So they are already very extended to the downside while the weekly is flipped. And what I often marked out previously was that you often have that bearish market structure turn here on the breadth, and then you have, for example, a bounce that marks here a bearish divergence on the stochastics. Like here, where the bottoming process itself had a bounce in it on the higher time frame that then follow through to the next push up, or here at the bottom, we gone down, we had bearish market structure breadth, and then we made a double top, double bottom on the stochastics here, double bottom on the stochastics here. It took just a bit longer because of the 2024 range. And it's normal that these stochastics here are turning way faster because the momentum really was out here in the range. We already lost it. So they indicated for me that this break in breadth here can follow. And this is just a more lazy indication, especially on the weekly, that we are here really breaking down. But when I see these two in combination, so the stochastics have turned and the breadth follows, then I'm really getting defensive on the higher time frames. And the same thing here, we can see something on these stochastics like this, and the breadth just takes longer to turn. But this really, with the breadth turning and the stochastics turning a second time, would be then my long signal. So they are just a bit more early than the other thing. And in combination, this then displays a clear picture for me where this cycle is headed, or do we see more upside? Because the breadth is very difficult to turn, but the stochastics are more direct price action. I hope that answers your
Got it.
question.
So like in conclusion, the two lines, the Bob Lucas indicator, the smooth stochastics are a leading
Mhm.
indicator kind of. They happen first. And they can bounce
They
around, but your custom stochastics, the green and the gray line with the S and the B on it, that's a slower signal.
Yeah, this signal takes market structure in consideration, so also highs and lows, also the
Mm,
super trend or MACD. So there's a lot more into this that needs to be turned and gives then, but when it turns, it always gives a very clear go signal for a heavy rally because it
mm,
is so difficult to turn. And it needs more basing to turn this around, which is totally fine on the weekly charts, as I'm expecting not to get out of this very, very fast. If we want to go out of this and turn all the momentum indicators or breadth indicators again bullish, we need a form of structure building first, basing out, turning the indicators around, gaining again momentum, so lack of downside momentum and gaining of upside momentum. And as we see that, this should base out, and then we are ready for the next push. As long as this is turned so heavily bearish and downside favored, I'm considering, I'm interpreting every push here as bearish retest in the first place, and do not assume that we will pump directly out of it because it just needs a bit more time to turn. So, for
that's awesome.
example,
Yeah.
yeah, the breath turns bearish. This bounce here back into the range, I was pretty sure it get faded because this is always my signal to get out and sell rallies. And the opposite, of course, when it turns bullish, it often turns bullish, and then we have one back test like here. This is the back test here. I would absolutely long because the breath here turned bullish. Yeah. So that's about that.
Thank you.
And
No, that's
then
super helpful.
yeah, sure. And then just here marked in yellow some key levels I'm looking at. The problem is that the 2024 range was not a very well defined range. It was more a descending range. But I have these two interesting areas below here. Of course, here in the high 70s. And should we deviate back inside the old range, which is pretty bearish, then we should find the next support somewhere near these range lows where we often pumped out of it, but they got weaker. So I would then look at maybe 60s, but that chart here I would really take level by level. And these levels previously got defined by the last bull market, of course. This was our highs here, and this level here was basically here the breaking point into the depth of the bear market. And then we have the
Mm.
big range here at the bottom. But I won't look to down to that as soon as long as we hold above here. So really the next key levels on the weekly chart, I see no other levels. We have one resistance level above us, which are the current range lows where we just broke down and bearish retested. And we have one clear level below us here, which is in the lower 70Ks, where I assume we see some more supportive price action, or should see supportive price action, at least in the first place. And of course, the weekly 50 is not yet broken, which is a very clear indication that maybe here the higher time frames shift even more bearishly. But yeah, um, that's so far so good with the weekly charts. I would look into the daily charts to get a bit of more of a feeling how this next 60-day cycle could proceed.
This is my
So
favorite
with
part. I love watching your 60-day cycle analysis.
yeah,
It's better than Bob
okay.
Lucas.
So I hope I keep it engaging.
No,
So
it's good.
on the 60-day cycle chart, what we see, and I already scribbled something into here, which is basically a bullish scenario for me. What we see, we had a 60-day cycle where we had a very early push into the cycle and a late top, and then things turned. We get an early top and very much downside momentum during the cycle with complete lack of momentum before finally breaking down into a possible 60-day cycle low. Here, I marked this wick out. And then, and that's the scary part, we could have topped on day 3 already with the Trump pump news on the weekend. Gets pretty clear on that chart. And now are losing our daily trend here, which are the daily 200s. I also very likely go often to the 12-hour chart because 12-hour trend has always been very supportive here on the upside. And also that, of course, is lost locally. And we also broke down this kind of compressing structure. So that was what I'm looking at the last time. After a while this weekend, we have that form of compression here below the range where we just broke down. And this I interpret as kind of a bear flag, and we are breaking down from this now further into maybe a mid-cycle low for this next 60-day cycle. So we are clearly in a bearish cycle. We topped out very early. We are breaking down. We have here near absolutely no levels I'm looking at as support because here is nothing in the past that would indicate me that here's a form of support level. So I'm looking for further downside here. Also the daily breath, when I turn on the daily breath indication, we see we topped out here within this 60-day cycle. And since then, bear diff basically in this range. Also, the second high here, which swept the high, was a big bear divergence on the breath. And we further grind it down and grind it down and grind it down. And we turned it again. The stochastics and the daily breath are turned bearish again very early in the cycle. Not a good sign. As said, on the weekly time frame, we also turned bearish, and to get out of there, we need time. Some things just need time to repair itself. So what I'm looking at, and I don't know where this will happen, if it happens here in the high 70s or further much more lower, like here, I draw a kind of a diagonal line here just to try some things out to find levels. I don't know where this happens, but this is what I'm looking at, a form of basing and structure building. And only if I see this, so continued structure, form of base, then a continued structure of higher highs and higher lows, I would turn bullish again. And that here, the next 60-day cycle low, if we make a higher low here, that would maybe trigger a very solid, maybe together with the daily 200s, a very, very solid long setup again for a form of summer rally. I'm not ruling that out, right? But if we lack that structure here and reject here and fall back inside the spacing range or make new lows here, that would indicate me that we are maybe entering, and I need to say the word, maybe entering a bear market for crypto in general. And I have more macro charts that show me and indicate me that this is definitely a possibility. But for now, I'm taking it cycle by cycle, clearly a bearish cycle. So each bounce should be shorted into the lower support levels. And I'm fully in cash. I have no long exposure since basically the second high here. And I shorted some here on losing this 60-day cycle into the low. And then since then, I'm basically flat and waiting for clear triggers. But yeah, that is my 60-day cycle outlook. I'm looking for structure building here. And we had that previously. I shared it in the last video we did. These 60-day cycles like this, where we build structure with clear higher highs and higher lows, that indicates and triggers a very positive next 60-day cycle. Or when we go further back, down here, we see we have a form of base building after the breaking down, and then higher highs and higher lows to start off into a rally. And that really here, that mid-cycle low was a perfect long setup. with reclaiming daily 200s, of course, in a range. And here also very strong 60-day cycle bottom. And yeah, that's what I'm looking at on the bullish side. On the bearish side, of course, we can go much lower, and I'm looking at support levels here to long, maybe when coming out of the next 60-day cycle. But here locally, actually nothing really looks encouraging for long setups on the daily charts. Maybe on the smaller timeframes, on the lower timeframes, there is some hope, but on the daily charts, this is clearly a bearish structure, and it takes a lot to come out of this. So, do you have any things we need to cover on the daily chart before I go to US Tether dominance and things like total free or regular finance
No,
stuff like S?
I think this is great. I think in conclusion, things just look pretty bearish right now for Bitcoin, and we need to take it day by day and play level to level, and not bag hold on the way down. I think that's just so important. Don't get attached to these coins. They're a vehicle for accumulating wealth. They shouldn't have much emotional attachment. Um,
Oh yeah,
so yeah, keep going, Max. You're doing great.
yeah. Especially altcoins here, they were showed us the weakness in forehand before Bitcoin even broke down from its structure. So what I always tend to say is risk sells off first. So normally what you see is what everybody was hoping for is altcoin rallies while Bitcoin is topping. And yes, of course it did. When we are topping here, altcoins rallied, but they will sell off first when Bitcoin shows weakness here. And if Bitcoin breaks down, we don't really need to look on the higher time frame altcoin charts. They of course all look absolutely terrible. So yeah, in this kind of a scenario, I would really recommend to de-risk, as you can always buy back into the market if there's hope for the next rally.
That's such an
But you,
important concept. I think
yeah,
like having the mental flexibility to cut a position at a loss, knowing it's so easy just to get back into it later
yeah,
at a better
small loss,
opportunity. You have to retrain your brain to do that.
exactly. You open an app, you are back allocated fully to the market. But these drops here, I mean, a 10% drop on Bitcoin happens pretty fast, and your altcoin portfolio is pretty down bad if we go down here further, because many say altcoins are already down 80%. They can go lower, right? This is
They can
very
go
much,
down another 80% easily, and then
yeah,
they can go down another 80% after that. I mean, that's why they go up 6,000% or whatever, and from the bottom. And yeah, you have to be able to expect that they can decline a lot as well.
yeah, why not? I mean, if you have an altcoin that is 90% down, if he does again a 50% down move, that is just 95% down from the top. So this is total 5%, but for you it's the half of your portfolio again. So it is, yeah, pretty, could be pretty bad. So I would really recommend de-risking. If you did not already do that, I know, sadly know many people that are stuck with their bags at the moment, and I can see that the market maybe does not give the perfect exit. So I'm really am very defensive, especially below these key high time frame trends, and with a weekly bearish trend. I don't like this here. And we have many other charts that also are pretty bearish, like US Tether dominance. And I take this on the weekly chart, um, which I think there's a better chart, which is USDT dot dominance plus USDT dot dominance. You brought this up
Hmm.
last time,
And that looks
and I
terrible.
mean, yeah. So what we see here, we had the 2021 March top, and then the second top in crypto here, and I marked out these two levels here because I see very similar price action. Of course, here we were in a different kind of structure, but the picture really prints kind of the same way, only that here we now have a pretty clear bearish picture for crypto as the cash dominance in the market in general breaks out as people de-risk into cash, which with very high volume here, like we saw on the previous top. So this is just an extra warning sign for me to be extra cautious here. And yeah, don't take that on the easy shoulder. I would respect such significant market structure breaks here. If we make a higher high here, this is definitely terrifying for me. So yeah, another chart that just does not look very supportive for crypto, even though the dollar index is breaking down. Um, but also that does not help risk assets at the moment as there's a lot of uncertainty under the current administration. Um, Really, that then brings me to a total free chart, which portrays altcoins. And I have now, as we break these high down and lose maybe the weekly 50 EMA, which is tends to be resistance or support on the way up. When we break this level here and cannot sustain here, I'm really looking for giving back the whole rally here. That means further downside for altcoins. And this is just a scribble, maybe upside after. But in the short term, I'm looking really for this level here, kind of similar like we saw 2024 when we came into this summer and just grinded lower and lower until finally hitting the first support level here. This can happen here too if we break down further. Weekly breath is bearish, does not look so good, kind of a double toppy situation like on Bitcoin. And
I like that
yeah,
visual a lot. Like further getting into it, like what you're doing is basically you're comparing what happened last. I mean, I don't even know if this is considered a different cycle, but you're comparing what happened in 2024 to what happened now, and it's like
mhm,
it tested a prior range, a very tight range,
yeah,
um, from like late 2023 before it went higher, and hopefully, if fractals can be trusted, maybe we'll test the 2024 tight consolidation range there before going higher. And if it's really like the end of a cycle and it's going to only continue getting worse, then it might go lower than that. Um, but
exactly.
if it's not
But
completely cooked and if tariffs are temporary and jobs are still strong and inflation is under control, then maybe this scenario can play out. I think that's what has to happen for this scenario to play out. I would not be surprised at all if we test that area.
oh, absolutely not. I'm looking for that. As soon as we hit that area, I'm getting interested in swing longs again. Like this is definitely the sign for this then should be further extended to the downside and maybe this already bullish divergence for at least having a pump. And even in a bear market, you have to remind yourself altcoins can have 50 to 200% pumps, which are basically exit pumps, but they are definitely things you can play into and are pretty aggressive and you get more of out of them as out of shorts in this kind of situation as we are so sold off and in a key inflection point. So I'm just searching for that key next levels and this here would turn me very interesting and maybe for example this coincides with something we see here sweeping the high and then breaking down again here then I would long like on US tether
Mm-hmm.
which bearish break, and that together then would print a picture for me where it would when we do such a stream say, hey, I'm looking for longs here and I'm looking for a bullish next 60-day cycle to long into resistance levels, of course. And once they are reclaimed, once we reclaim such a key level here, for example, and key trends, that then, like if we see such a reclaim here, that then would open the doors for a further extended rally and the next leg in this bull market if it's not over. But here you just have to be defensive,
Mm-hmm.
in my opinion. Yeah, um, not many other charts to cover. We have the
Yeah,
S&P.
we definitely should talk about the U.S. markets.
Yeah, so starting with the S&P, just waiting until my trend loads, we are here breaking down from major inflection points, which are the daily 200s, threatening a breakdown. We definitely undercutted the last low and not minimal. So we break down significantly here, which oftentimes marked let me see if I can mark it out here in the chart, which oftentimes marked when we break such lows, uh further bigger correction that can come when we go deeper into summer. So does not have to be, right? This does not have to happen, but actually it looks pretty toppy and we are breaking down. So we have to respect that. And this can extend further. And of course, if the US markets, if the NASDAQ, if the SPX looks like this, we cannot expect for crypto to outperform. Crypto still trades like a risk asset and not like gold. And even gold looks toppy at the moment, by the way. So, yeah, on the NASDAQ, pretty clear picture like previous ones where we topped out. We get form of a bearish divergence here after the breath ping-ponging a long time on the weekly chart on the upper side. You see how aggressive the stochastics are on the weekly and how less aggressive and sticky the breath really is. So this just tells me we have a high breath and this is a bull market correction. But once the breath really turns down, and this is a great example for taking cycle charts like double smooth stochastics and the breath together in a chart, as you see, as the breath really extends down and breaks down from its top range, this no longer are bull market corrections. We go down in a deeper correction, and we could see here the same scenario with the breath really breaking down here from its top side range and dragging the whole chart into a deeper correction over this summer before coming out of it, maybe as soon as either end of 2025 or beginning of 2026. No one can tell that exactly, but usually these corrections take a bit longer.
Wow.
Um,
That's a really scary idea. I mean,
yeah,
I'm not a bag holder. I'm actually even in my brokerage accounts like pretty much all in cash besides some like very long-term like Berkshire Hathaway stock that I've held for many years. But yeah, it's kind of uncanny to that 2021-2022 picture right here.
yeah, you see the pattern repeating itself over time in this market. I marked that out here, where we gone into a smaller, bigger correction, locally a bigger correction, right? With the bearish divergence
Mm.
breaking down. The same thing happened here, bigger correction. Now we had a very bullish cycle here with a dip in between, Corona type, Black Swan stuff, and then a very big correction. And we had the next leg up, which we can say this was a bad market. This was a great market here. The Nasdaq ran 100%, taking it from 2022. So hey, this is a gigantic rally on many stocks. And now we are threatening after one, two, three, four, five corrections within this bull market here, a bigger breakdown, which is totally fine. We just have to take it in consideration. These are bigger picture cycles here I marked out in the chart. And yeah, it would fit timing wise. It would fit on the picture I see here again with the breath. So yeah, getting pretty defensive here. Let's see how this turns out. And
Yeah.
this is basically my high time frame analysis for now. This can change. We can save us and bear it further. But in general, I'm defensive now, looking for de-risking or shorting the markets.
Yeah. Well, this has been I feel like today because everything is selling off so hard, we had such a bad weekly open, big gap down.
Yeah.
And then seeing this from a more zoomed out perspective, like it all kind of makes sense. And I think everyone has at the beginning of a bear market this like sharp gut reaction of denial. You have
Hmm.
regrets. I didn't make enough. I didn't keep enough of what I made. I wish we had more time. I wish we could go back to easy
Sure.
mode. Why didn't I do all those things? But like you can't think like that, or otherwise you're going to get more wrecked. You need to just preserve your capital and wait for the next set of easy like setups.
Yeah,
So
we
that's
wrote
all
about.
I can say here.
Yeah, I can just tell a story. I was
Yeah.
there last bull cycle, and I knew the feeling when the market went to shit, and we had that second top that fooled everybody, and everybody was the strong opinion, like the big accounts that were up a lot during the bull market, where it's easy mode. So they are big, like they are up bigly because they took on risk very early, and like basically every account that was not a trader screamed for that third leg higher, the super cycle that starts now for
Show
crypto,
show
but it
them,
never
show them Max,
came.
show them the Bitcoin chart.
The Bitcoin chart,
Yeah.
yeah. So let's dive into the Bitcoin chart. So we were in this market cycle condition, and this top here was a pretty clear rollover, and actually many de-risked here. That was not bad, but this feels like a current situation, to be honest. We can go lower. So we went lower, we based, and the second leg higher fooled many people. They just like this. Many did not catch this rally here and burned their fingers then on this correction. And here was everybody turbo bullish. Yeah, we will extend higher, higher, higher. But we broke down. And here were really the point in the market where many accounts got blown up. Like I saw many people got turbo liquidated. And then we had the hope of the third leg higher. So the basic picture for everybody was we have the first leg, the second leg, and we get the third really big leg in the bull market that lets us retire all our bloodline kind of stuff. And yeah, what should I say? It never came. We got into a bear market. I also got grabbed by the thought of that. I did not analyze higher time frames as good as I'm doing now and respecting them. So I was basically trying to play the long side the whole bear market and got myself pretty wrecked. But this is a learning. This is a learning. Once higher time frames change, you have to respect them. You can never know. Of course, you can scream for a next leg higher, but what in the chart tells you that this will come? Nothing. You need at least some structure, some indication, some 6-day cycle that turns the whole thing around for me to really consider, hey, we go higher now. Because after experiencing that bear market here that fooled many people, um, yeah, and I think on X also many people in 2023, this was like common sense. 2023 when we got back into the range and pumped out of here, everybody on CT talked about how empty the space is. It got completely wiped out, and that was during this bear market as basically no one sold its stuff. So yeah, pretty hard learnings. Yeah, and with this bear market, also the S&P, NASDAQ, everything corrected basically. So I'm tempted to respect what we see here on the higher time
Hmm.
frames.
That weekly bar right now, can you zoom out to where we can try to see that the current weekly bar? Yeah. I mean, look at the weekly bars when it first sell off there in 2021
Mhm.
versus the weekly bar right now. It's
Yeah,
pretty uncanny.
yeah, and that's exactly what I'm looking at. So, uh, like the downside momentum should slow down now. We had a big breakdown on the weekly chart, very big breakdown, and we should see a form of job or something like that and structure building if we really want to come out of this and have such a type scenario where we really get a real rally. But and that like everybody refers to this chart 2021, but I have to say this is not the norm. This is not the norm how markets work, that we get this very high time frame second top. And I think it's just a bad example for markets. And I have the feeling that this will be the hope for many, that we make the second top, and but we could end up just going further down.
Hmm.
Looks unreal, but could be possible. Yeah, but that's in general from me, from my side. I think you
Yeah.
can take and share some.
I think sadly, this is a philosophy that I love like thinking about all the time. markets, well, most people in markets lose. It's just a fact. It's something
Mm-hmm.
like, you call it 1 to 5% of people are profitable traders, meaning that the vast majority is losing money and they're wrong most of the time. Um, so I like to always ask, I'm like, what is the direction of max pain? What is the most painful event for the most people? And it's things like that. It's like, in 2021, you were like, oh, everyone was waiting for the third drive higher. One drive, two drive, three drive, and it never happened. Everyone goes
Mm-hmm.
max long on that higher low right there at the end of
Yeah,
2021, beginning of 2022, and they get liquidated here. Everyone here is
completely.
probably going to be like, well, we're at least going to get a double top like 2021. We're going to tap the old range highs at 72, whatever, to 69K. And then everyone's going to be waiting for, oh, we're going to get back at least to 110K. And they're going to be max long, around the middle after the big move of the trend is played out. And then it's not even going to hit 91. It's going to decline. It's something like that, right? It's always max pain, in my opinion. Um,
Well, yeah. When we zoom out, this does not look, and it already looks like we had that two tops in the cycle. So I'm not ruling out that this is the end. Basically, I'm not a doom caller, but I think we should make people aware that this is a possibility. Everybody has to decide for its own, but after participating in this market here and seeing how you can get fooled by your basically wishes and hopes because you didn't reach your dream portfolio goal during a bull market. And once the problem is, with the mind of the people, the problem is once you break down from such a range, altcoins are down bad already. Portfolios of most people are down 60-70% from the portfolio highs because they backholded their stuff, which is totally normal. Um, you are up a lot when you invested early, but this is just how markets work. And then the problem is you never reached your goals and you had so many hopes and ego dreams put into your portfolio, all-time high value, that you want to have it back. And it's very hard to accept that it could not happen. But you will hurt yourself. You will hurt yourself if you keep sticking to that belief and play not the defense. At a point, you have to be defensive and secure what you have. As said previously, you can always go back into the market, but take into consideration that this here was early and this here is not. So the risk and reward does not really fit anymore for putting everything at risk. At least if we don't see further structure and coming really strong out of this. So now I'm done.
so this is my watch list, and I highly, highly, highly recommend anyone who wants to take their trading to the next level should every Sunday before markets open on Monday morning, East Coast US time, create a watch list and use this watch list during the whole week. If you're just logging on Monday morning or Tuesday or whatever and just willy nilly taking trades that you see, you're gonna get wrecked. You're gonna get carded out. You're going to lose. There's people that are way smarter and way better at trading in the markets. They're professionals, they're quant hedge funds. These are people that love taking your money. So there's little ways you can get an edge, and I think one of the most essential first ways to do that is just to create a weekly watch list. The other one is journaling. Every single trade should be logged. Your P&L should be logged. Your running P&L should be logged. Your how you were thinking when you took the trade, why you took the trade, what were the results, how could you make the trade better, like all those kind of things. Everyone has their own style of doing it, and I think the more you do it, the better you get. But those two things, a watch list and a journal, are such a important and necessary first step to becoming a better trader. So this is my watch list this week. I made it last night, and kind of as I was looking at it this morning, most of these are not valid at all already. Um, a lot of these trades, the way I'm thinking of playing them, are simply just level to level trading. They're key weekly highs and key weekly lows, and I want to see how price reacts to them. I can already tell you I don't like what Jupiter is showing. I don't like what TIA. I don't like Ondo. I didn't like Pepe. I think ENA could be possible. I liked this ETH short idea. I think BTC has already dropped too much to go short on it. Bonk looks pretty bad. I think Litecoin at range lows could be interesting, and I think Link at range lows could be interesting. So I will quickly talk about the ones that I think look interesting at this point, and we can go from there, which is Athena. So as with all of these coins, I really, really, really couldn't recommend for every single person, no matter what your skill level is, to start on the weekly chart. So this is Athena on the weekly chart. And as you can see, it's really just kind of bouncing between like two levels. This is a key weekly high here. And then this is a weekly low. And that's its whole life. It's just kind of been existing in between these two ranges. But over here, what I'm seeing that's so interesting on a higher time frame weekly level is I am seeing that it is finding one top here and it is finding these increasingly low bottoms. The low bottoms part kind of concerns me from a long perspective, but the equal highs up here is very exciting and interesting to me. So what just generally for what this means is that there are bids set here. Sorry, there are asks, people that are selling, and each time we hit this, those resting asks get triggered. And hypothetically, they're getting weaker and weaker and weaker and weaker and weaker. And we know that buyers are willing to push the price up to there. So essentially what I'm trying to do, or what I'm thinking of, if I zoom in, you can look at the daily and kind of see what this price action looks like here. And then when I look at the 1 hour, which is kind of the method that I like to trade off of, there's a couple things that are interesting. Obviously, the level is the most important thing. I am not going to buy this until we break out of this. I'm not buying any dips. I want to see it come up. I want it to break. I want there to be significant volume, meaning there's interest here, and I want it to push higher. That's exactly the trade that I'm looking for here. And there's a couple of other pieces of confluence that I think are interesting. I think if you zoom into this 1 hour time frame, I think this is starting to look kind of like a head on a reverse head and shoulders. So that would be the head, and then call this like a shoulder, call this like a shoulder. So this would be the neckline here. And then with these reverse head and shoulder plays, you want it to come, you want it to break the neckline with volume, and you want it to keep going. Also for my moving average trend traders, this is the 1 hour 200s moving average. It's the EMA has flipped the SMA. It's respecting it. I think as this, that's another, obvious piece of good bullish momentum there. And then the last kind of piece, besides it breaking through, which is the most important piece, I also want to see RSI on the 1 hour start looking a little more bullish. I want it to trend upwards. I want it to point upwards. I don't want it to point down. I don't want like it to go down and then vertical like this. I wouldn't take that trade. I always like seeing more and more and more and more structure before breakout, because that means there's just more people hiding bids here. There's more safety. There's more support. So that's ENA. That's a long. So now we'll go to a short that I'm looking at on Ethereum. So again, zooming out on Ethereum to, let's delete the volume profile. Zooming out to the weekly, I would say that this undoubtedly looks pretty terrible. This is like a giant M. And on a macro perspective, like this is making a lower low. So this is a very key low for it to hold. And now, it's like shit, like we can't even hold that. We're going to go lower. There's also the mental level of the number 2000. It's a very round number where I think a lot of people will bid. But I think once that's broken, I think that there's not a lot below. So when I look at Ethereum, I'm like, okay, if we lose this region here, this 2000 level, where's it going to go next? I think the next stop is easily this 1500 region here. And that's not even that far. Or I think not even that crazy of an idea. So zooming in again to the daily, you've kind of got this like downward sloping lower high, lower high, lower high, lower high. It's kind of this perfect like descending triangle. And then that actually is what the pattern is called from a technical perspective, is you have equal lows here where again bidders are supporting this up, but each time it tests here, that wall of bids that's here at like this, call it 2000 level, gets weaker and weaker and weaker. And so it bounced here up this 2000 level, and we had a nice little tiny push here. We did it again here, and we only got to here. So buyers are not able to push this up as much as they were. It's getting weaker and weaker and weaker. So the trade is actually kind of really simple. I am expecting that when this triangle, this descending triangle, which is a bearish pattern, especially at key levels, like at this key weekly level, once it breaks here, I'm expecting maybe if you might get a couple of minutes to get the retest, which is what I'm expecting to do. And then there's just nothing below here. I think you can ride this at least to around 1500 down here. So that's my short idea for the day. I had the same idea on Bitcoin, but interestingly enough, Bitcoin is kind of already breaking the structure, and I don't want to chase. I actually was very interested, and I was hoping on Bitcoin we would have gone up to 85,000 again, played above here, gotten everyone comfortable, maybe like this, and then down, and then you would short it here. Sorry, you'd short it on this line, and then you just keep writing it down. That didn't happen. Bitcoin is kind of like already broken down. So next best thing is Ethereum, which is kind of the same exact thing. It came up, it retested this weekly level, but again, couldn't break this trend line, and now it's shitting the bed, and it's back down at this lower level, and when it breaks it, you short it.
So
Yeah,
can I hang in there?
yeah,
Can you stay on the chart? So I also wanted to short Bitcoin on the 85
yeah,
retest. Didn't get it. I think it's kind of the down trends
yeah,
kind of stuff. You do not get your standard short setups where it just grinds lower and lower and lower, and also cannot really de-risk. So many people get left trapped inside this horrible PA. When you go back to Ethereum though,
yeah.
maybe it's interesting that you tell a bit short story about how it came that you are now focusing on these breakout trades rather than the trend retest trades.
Totally.
So as you said, you search for the breakdown finally now.
Yeah. I think that was a really big level up in my own trading. Um, and I think so much of trading is your personal journey, and trading is like, I think, a manifestation of like your inner character, your inner personality. Um, for me, trend trading, I think, is obviously a very valid and normal way to trade, and a lot of people do it. Kind of the idea that you have this moving average. This is the 1 hour moving average. Bitcoin kind of follows it. The idea is, hey, well, why don't instead of buying a break down here when price goes down below here, you'd say, hey, well, it seems to be bouncing off this moving average. Why don't we just moving average will come here. I'll short it here, and then hopefully like it'll hold and it won't make a higher high here, and then it'll come down, then hopefully it'll break that level, and then hopefully it'll break that level. It'll break here, and then it'll break here, and we'll be good, and then it'll do the thing that I wanted it to do. And I think I learned trading like that. Trader Mercury, an awesome trader, incredibly talented, and I think he trades. He's a trend trader, but I think his biggest alpha is his mental side of things, his discipline, his strictness, his adherence to his rules. I think that's his alpha. Um, it just wasn't the way that I felt most comfortable trading. I found that I could hugely increase my winning trades, like the percentage of winners, if instead of I was buying like a pullback into a trend, I was buying a breakout, meaning that I know there's nothing underneath this level. Yes, this is not as good of a trade from like a risk reward perspective. Like if I did I did this and I put it up here and I had the same target level, That's a 5.5 R trade, and the one I've drawn up is 3.75. This is a much better RR trade. But there's nothing that tells me that that's going to work out. I'm significantly decreasing the probability this trade works, because if I was going to buy this moving average, then it would be outside of this, this descending triangle that I've drawn, that I know this is a pattern of bearishness. I know that this is lower highs, equal lows. I know the order book is getting drained. There's less bidders here. If this happens, this is very bullish. If this happened, I would want to go. I would rather be long. I'm not saying I would go long, but if the price was here, even if this moving average was here, my gun to my head, I would say, oh, that's actually gonna go higher. And that's what's beautiful about this. There's nothing that's forcing me to take this trade. Ethereum could do exactly this, and I would just simply not take this trade. I don't have to do anything. But if I'm putting limit orders in and I'm saying I'm going to buy this moving average, I'm going to set this thing, I'm going to leave it overnight, like, there's just so many things that can happen that can go wrong that I'm not interested in kind of managing. So I've done the math, at least for myself, and my percentage has gone up a ton. My win rate has gone up a ton by, instead of buying retests and buying the dip per se, and instead just buying the breakout and hoping that it does exactly what I think it's going to do.
It is a system where you also say no trigger, no trade, but it's
Yeah,
our directional trade. So directional triggers, right?
totally.
If I try too long, I want to see a breakout into the upside and not wait for a bigger dip, because a bigger dip can extend.
Yeah. I mean, look, in one of these markets, like, I I don't even know, like, people think grass looks good. And by the way, I was looking at this too. This is just a giant fucking range. Like, this is the weekly, that's range lows, this is range highs. I wouldn't fucking touch this unless we're here at this range low, or here at this range high. Everything else is just bullshit. And that's also
Yeah.
one of the things I candidly don't really like about trend trading, is that to play these moving averages, you're frequently like, okay, so this is how a moving average trader would trade. So this is valid. This is the range low that I circled. This is the 1 hour. Let's say this looks good. It does look kind of good. So you'd say, hey, it breaks. Boom. Right there. Okay, let's long it and just hope this keeps holding. Boom. It kind of breaks down. Maybe you cut it here. Maybe you're like, like, that's it. And then, oh, you're faked out. Great, great, great.
It's so
And then
flip-flop.
a huge breakdown. And honestly, this is a pretty good trade. This is a pretty good trade. But at the same time, I wasn't looking at this trade, but you could have done the same exact thing. I'm looking at this right now, and I haven't looked at this before this video call, but like, this is a head, this is kind of a shoulder, this is a shoulder. So the way you could have played this as well is you could have said, all right, this is the neckline of that. This is the weekly level that I want to play. Anything above here, I buy the retest, I hide my stop down here, and boom. Same thing. I don't have to look at these moving averages to do that. I know it tested this level, it drew down again, it cleared everything out, it reclaimed this weekly level at the total high time frame lows, and now it's pushing higher. It's kind of the same thing. So I really think, like, my style of trading, I always joke, I'm like, I'm a reclaim trader. I don't need moving averages. I think they're helpful, but I'm not a moving average trader, in my opinion, would have bought here, and I would have bought here when I knew that this was going to break out upwards. Because in my honest opinion, there's nothing really that is keeping this from going down at that point, at this price. But you go up here and you're like, I really think I have so much more confirmation that this is making a higher high and this is going to go higher. Like, the market has shown its hand at this point. You're increasing your percentage win rate so much more here, in my opinion. And then, like, too, like with real trend trading, you'd buy it here and you'd put your stop here. But with breakout trading, I'm kind of just like, I know which way this is going to go most likely. If it's significant enough to break this level, I can hide my stop much tighter because I know this weekly level is kind of my invalidation. So I would probably put my stop much tighter.
I'm totally on your side that fewer levels on the chart are far more important than the trend line, because levels are directed by buyers and sellers really stepping in at specific points in the order book. And these lines, these magic lines we see here, just portray how we moved to these levels in the past.
Totally.
Um, so yeah, levels are for me also definitely better, but I use the trends really as confluence when entering something. When we come out of a higher time frame downtrend with breath turning and reclaiming, for example, daily 200s on a range low, I'm in. I'm in. This is
Yeah.
enough confluence for me.
Totally. I also have this theory that more people have the weekly levels marked on their chart, or they have, they have the big gray boxes, right? They're putting these on their charts. I think more people have the weekly levels or the gray boxes than they have these like very specific moving averages. So I think more people are respecting those levels than anything else. So the more traders are looking at that, they're looking at the same thing, the more likely price is likely to react to that level. So yeah, that's kind of why I have shifted to trading like this. I'll quickly, because I know this is going on a good bit, but I will go to Litecoin real quick. This was another one where I was interested in. And again, zooming out to the weekly level, since November of 2024, this thing has really just traded in a giant range. So I am very interested in seeing what happens when we get back to range lows. And I'm only interested if I would like to see kind of a sweep of them, get all the longs liquidated, and then kind of we hover, market structure forms, and then we can kind of go back upwards. And who knows? Like I do think things look kind of bearish at this point, so I don't know how high this would make it. But I am interested to see how this reacts here. And pretty much identical trade is Link. And I was incredibly bearish here, and I did short this because I saw a double top here and here, and this was also a very key weekly level up here. And if you zoom out, this is forming a very, very just kind of bearish downward channel. And it hit the channel highs, and I am looking at this channel low here, and there's confluence with this weekly level at 12.712. So if you zoom out, that level is right here, and that's kind of like this new range. So either this thing is going to respect this range, just like how I drew Litecoin. It's either going to respect it, and maybe it'll react upwards, or we lose it, and then the next point of interest I would have is like down here, which is around like 10.08. So that's really everything that I'm looking at, Max. I think you covered macro quite well. Um, I don't think I really have much else to add. Like I'm very much looking at this. This is VTI Vanguard Total Stock Market. This is the entire U.S. stock market, both the S&P and NASDAQ. It's like everything, and I don't see how losing the 200 daily moving average um, can be seen as bearish. And this is now the weekly moving average. So last time it tested here, it was very quick and it bounced. This was a little bit of a fake out, I would say, in late 2023. I'm hoping it's kind of like that, like it's a fake out, and I think you know it, it's a non-zero possibility that it could be like 2022, where we lost, a lot of volatility, and then we kind of bottomed towards the end of 2022, and then we rallied pretty hard. I think that would be a great outcome, honestly. It's hard for me to predict other things besides that, but that is what I'm looking for, my friend. So I'm gonna stop
Yeah,
sharing my screen.
thinking the same. I'm thinking the same. I
Yeah,
think higher time frames are now the leading indicator. I need to get them invalidated actually before turning bullish again. And taking it day by day, I know you're more in the lower time frames now, actually trading that. I paused trading this for the moment. I want to see clearer structure, base forming and breaking down to short, or base forming and breaking up to long.
Mm-hmm.
Um, I will play this market on the daily chart because I run my consultancy company actually at the moment still. So um, but I think there will be some great opportunities as volatility is our trader's best friend. So we can play this to the upside or to the downside. If you're a trader, this is a great market environment with a lot of opportunities actually, especially after such a big sell-off. Um, we get some clear levels to long and clear levels of resistance to short. And I would leave it by that and see how the whole market develops over this week and where we are when we meet the next time.
Absolutely. Well said, Max. Thank you, everyone. And again, I hope you learned something. This is educational only, not financial advice. And best of luck navigating these markets. See you next time.
Bye.
Bye.